Hi, this is Joe from Financial Reset Imminent, and in this video I want to discuss an article on Zero Hedge titled PIMCO Economist has a stunning proposal to save the economy. The Fed should monetize gold. So basically the gist of this article or this economist idea is that the Fed should unleash a massive Fed gold purchase program that could echo a Depression-era effort that effectively boosted the U.S. economy. So he is, of course, referring to FDR's 1933 Executive Order 6102, which made it illegal for a citizen to own gold bullion or coins or risk prison time. Americans promptly sold their gold to the government at the official price of $20.67, and all of that gold was then placed in Fort Knox. The Gold Reserve Act of 1934 then raised the official price of gold to $35, a near 70% increase, which resulted in an implicit devaluation of the US dollar. As Bassman points out, over the 3 years from January 1934 to December 1936, gross domestic product increased by 48%, the Dow Jones Stock Index rose by nearly 80%, and inflation averaged a positive 2% annually despite a national unemployment rate hovering around 18%. So Bassman says that the Fed should emulate a past success by making a public offer to purchase a significantly large quantity of gold bullion at a substantially greater price than today's free market level, perhaps $5,000 an ounce. So in other words, instead of taking all of this money and using it to buy U.S. treasuries or bonds, or using it to manipulate the market in other ways, Bassman is suggesting the federal government, or not the federal government, the Federal Reserve, which has nothing to do with the federal government, should then turn around and take that money and point it in the direction of gold. Now imagine what that could do if the Federal Reserve started a gold purchase program in which the Federal Reserve entered the market and started buying up gold. To me, it would make more sense for them to buy it in the open market while the price of gold is still very low in relative terms. And then when the price of gold gets so high that they have no choice, they have to turn around and do a repurchase program, they could do that. But what that means is, if you own gold, at some point, you're probably going to have to sell it to the government. That this sort of program will more than likely end up being enacted again. And over here it says, we have frequently hinted in the past that another Executive Order 6102 is inevitable for precisely these reasons. But it's the first time when we see a respected economist openly recommend this idea as a matter of public policy. So if you own gold, government pays you for it, a handsome sum, $5,000 an ounce, for example. You give them your gold, they get it, and then shortly thereafter they revalue it, let's say, to $10,000 an ounce, or $20,000 an ounce, or $50,000 an ounce. Then what that does is it effectively devalues the value of the US dollar in relation to the price of gold. But guess what else it's going to do? It's going to dramatically change the price of silver too. And silver was not confiscated before. In fact, silver was allowed to be in circulation as part of the currency all the way up until 1964. We had 90% gold, or I'm sorry, 90% silver coins. So if you have gold, you're going to have to trade it in, and you could be shortchanged on that massive increase that's going to happen in the value of gold afterwards. Whereas if you own silver, there's a potential that after that massive jump up takes place, you're going to be able to sell your silver and get a much greater rate of return on it. So thanks for watching this video. Please like, share, and favorite, and subscribe. And be safe, get prepared.